Hello all, this is Matador from freetradingvideos.com. It's 8:40 a.m. Eastern Standard Time on June 24th. Bit of a gap down we're seeing on the S&P 500 ETF. The SPY on worries that the Fed is saying that our recovery is not as strong as they thought, and that not much of a surprise to most of us, but you can see it in the markets. We did have a nice little rally, but things are starting to fail a little bit again. So here is a level of support. I'm just going to scrunch the 3-minute chart. Doesn't matter if you're looking at that, of course, or if you're even going up to a higher time frame. All the support levels are relevant. This swing low right here actually means something intraday. Notable tests, gap down below that. That's the 108.76 mark, and it looks like we're working with that number first today. Above that, if we continue higher here on a little trying to gap fill, we'll be looking at the 109 mark. So 109 and 109.10 were two very notable areas yesterday, and I've kind of based there along the close, so we'll be watching those. And then 108.20, good level of support on the way south. Going out to a 15-minute chart, you have to scrunch this all the way up just to get it, so we have to look at a higher time frame. So next logical spot of support on this chart, we are at 108 right now. Below that, I would say 107 in this breakout right here. So, just kind of a bit of a pullback and then boom. So a lot of people get hurt on the short side. So 107, we'll be watching that for support on the way south. So a lot of overhead resistance. Even this 200 MA, we're now solidly below on the 60-minute chart, and on a daily chart here. I wouldn't say daily minute. We are definitely solidly below the 200 MA there as well. Nice 50% retracement we're brewing on right now, and again, that's about the 108 mark. Let me drop that in here. So you can see that the 50% retrace line is what we've tested already, and that's the 109 mark, and that's why that's so significant even now after a 3-bar sell-off on this daily chart. Trying to find some support here and make a higher swing low, we might be able to chew our way out of this 111 and 200 MA. So we'll be looking for that. On a weekly chart, again, it kind of looks all scrunched up, but zoom in a little bit. There we go. And same thing, nice run up to the 200 MA. Over the last few weeks, pulled back to a level of support. Big test, however, and now we're back up to about the 50% retrace of that. So now we can take this fib line and change it. So now you can see that a 100% retracement would have come all the way back up to here. We did hit the 50% retrace to the penny along with this 20 MA, and it makes a lot of sense. And we did bounce, and we're working on chewing on the 50 MA on a weekly chart. So 50% retracement from here down, 50% retracement from here back up. So again, looking for a higher swing low as we try to hold up at 109 and the 50 MA on several different good support. But if that breaks, we need to be very careful about the downside. So good stuff, everybody. A little bit of a run around the markets for you this morning, and I'm looking forward to talking to you at noon to see how things are shaping up.